morning, everyone. This is Hadjikyriacos, analyst at IronFX, bringing you the morning comment for the 16th of August. Will the FOMC minutes show more officials joining the cautious camp? Today, the main event will be the release of the July FOMC meeting minutes. The statement accompanying the decision was very similar to the previous one, with the only changes relating to the inflation outlook and timing of the balance sheet normalization. We expect the financial community to dig into the minutes looking for more precise clues on the timing of the balance sheet normalization other than the relatively soon part of the statement. The statement was not clear on the inflation front either. The acknowledgement of inflation running below 2% was a downgrade from the previous description, but officials still expect it to stabilize around the target over the medium term. In our view, this doesn't paint a clear picture of the committee's view on inflation. The minutes of the June meeting showed a split committee, with some members attributing the recent softness in prices to idiosyncratic factors, while others expressed concerns that this weakness may persist. Up until the July gathering, the latter camp appeared to be right, as inflation continued to drift lower. If the minutes show that this camp among policymakers has grown larger, the market probability for another hike in 2017 may decline, and the dollar could come under renewed selling interest. Euro-dollar traded lower yesterday, breaking below the short-term uptrend line taken from the low of the 23rd of June. The pair found fresh buy orders near the 1.1690 level, and subsequently it rebounded. The break below the aforementioned uptrend line has shifted the short-term bias to flat in our view. Having said that, in case the FOMC minutes today signal that the cautious camp among the FOMC is growing larger, the latest rebound could continue. A clear break back above 1.1750 could set the stage for further upside recovery towards the 1.1830 zone. Australia's wage growth remains subdued. Overnight, Australia's wage price index for Q2 showed that wages rose at the same lackluster pace as in Q1. We think this is likely to confirm the RBA's concerns that even though the labour market continues to tighten, there is still no significant upward pressure on wage growth. The continued softness in wages enhances our own view that the RBA is likely to remain on hold for the foreseeable future, and suggests that the bank is unlikely to shift to a more hawkish stance anytime soon. As for today's economic data, in the UK, employment data for June will attract attention. The consensus is for the unemployment rate to have remained unchanged, while average weekly earnings are anticipated to have risen at the same pace as previously. We view the risks surrounding the unemployment rate forecast as tilted to the downside, considering that the services PMI for June showed the strongest increase in employment growth since April 2016. A downside surprise could support the pound. Otherwise, market focus may be primarily on any surprise in wages, which have remained subdued in recent months despite the notable pickup in inflation, keeping real wage growth in the UK negative and thereby dampening the outlook for household spending and economic growth. Cable tumbled yesterday to find support near the key zone of 1.2850. The price structure on the 4-hour chart suggests a short-term downtrend, but considering the pair's proximity to the crossroads of the critical 1.2850 level and the longer-term uptrend line taken from the lows of the 7th of October, we prefer to stay sidelined for now. A potential decline in the UK unemployment rate today could prove the catalyst for a rebound from the aforementioned crossroads. We prefer to wait for a clear close below that crossroads before we become confident that the latest downtrend may continue. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Hadjikyriacos, analyst at IronFX, wishing you solid trading.